Welcome everyone to the July 2023 Accounts Receivable Core Committee. Glad you could be here. We manage that, so get that out of the way. Start off with the agenda. We have swarm announcements. Just a reminder, the LFO training will be on August 17th, 10 a.m. at the Labor and Industries Building, Conference Room 260. There will be an email going out to the news list with more details such as parking and things like that. It will be recorded, so if you are not able to attend in person, you can watch the training. I had thought about doing it as a live broadcast, but just one too many things, having a chat come up and trying to deal with people that are in the room with questions. So I thought it might be a little simpler on my side, at least, if I just simply record the training that we do in person, and then we can post that recording on our website for everyone to watch. I'll send the link once it gets converted to the YouTube format. But other than that, any questions? It will cover kind of all the aspects of the year-end reporting for accounts receivable and liquidated and delinquent accounts. Provide some examples as needed for how to capture various information. Any questions on that? None? Year-end reporting reminders. Let me switch to my other screen that was supposed to be my notes to read, but the way this room is set up, it doesn't let me do that. So September 15th is the target date for entries to the LFO website. This allows time for the swarm review and any corrections that might be necessary, that those are completed by the October 1 deadline. That is a statutory deadline. That's the next item there. The LFO has to be completed by October 1st. It is a Sunday, so September 29th would be the last working day before that deadline. And so we don't have the ability to extend beyond that, at least, from a DAS perspective. So just keep that in mind as you get it into September and pulling your data together. For the AR honor roll, October 2nd is the deadline for the ARPM quarter 4 and the annual measure to be submitted, if applicable, which is agencies that are subject to the Oregon Accounting Manual. You also have to submit by October 2nd the write-off, abated, and canceled account certification form. This is the summary of the total amounts that were written off or abated by your agency. Note that the canceled portion is specific to the Department of Revenue and their debts that are under the tax ORS 350-155. Might be 305. I might have a typo there. Next due on October 2nd is the agency checklist. As you are going through and gathering your data for ARPM, LFO, the write-off certification, the checklist has components where it asks you, for example, if A should be greater than B, you put a yes or no if that is true based on what it's asking. These are the things that we look at from the swarm perspective to verify that the data at least makes sense. For example, your total AR outstanding in your ARPM should be greater than or equal to your LFO ending balance, since the LFO is a subset that only includes liquidated and delinquent accounts. So that is a question on that checklist. But you do need to submit that by October 2nd as well. We also have a LFO reporting worksheet. We don't require that, but we ask that if the agency uses that template to submit it with your other documents and so forth that are being submitted, it kind of helps us look at when you have made your entries to the LFO website. It's another way to check to see that there wasn't any transposition errors, things like that. So again, we ask that it be submitted if you used it, but it's not going to prohibit you from getting the AR honor roll if you don't send it to us. So any question on those documents that need to be submitted and the deadlines?
Gerald, this is Kim Hall, and I was on the website, the accounts receivable resources, and I went to the accounts receivable AR toolkit, and I was looking for the write-off, abated, and canceled certification form, and I cannot find that.
So the toolkit is probably not the right place. That's kind of more links and so forth for various collection tools. The certification form is the OAM form 753515, at least the annual one that would be submitted. There is another write-off form. I believe it's 753512, but don't quote me on that. It is the agency internal documentation that you would use at the point that you are writing off a specific account.
Right. So that form that you just mentioned, that is in the toolkit.
Okay.
But I can't find the one that you want us to submit by the October 2nd date.
So we can go here. So this is the SWARM website. And if you'll notice, you got the Oregon Accounting Manual link over here on the left.
Okay.
And then from here, under Chapter 75, which is the forms.
Great.
And then here is the 753513. That's the one that is the agency form that I just mentioned. But then 753515 is the annual certification of the write-off, abated, and canceled debts.
Got it. Okay. I was at the wrong site. I wasn't at SWARM. Thank you.
Yep, no problem. And I will put links in the minutes, so it'll make it a little easier to find when I send the minutes out. So a couple of other reminders, the RWO status is at DOR and how that relates to your AR reporting. We've talked about this a little bit in the last few meetings. But basically, if the agency is not written off a debt that is in RWO status, you should not report that to LFO as an account that is returned to the originating agency. Doing that will increase your unassigned non-exempt accounts, which we don't really want to reflect because they are currently at DOR. And so while DOR uses that as a status to indicate where they're at in their life cycle of collections, it is still at DOR, so it is appropriate or okay to leave that in the DOR balance if your agency is not writing it off. Now, if you have written it off, then you do need to report that as return to the originating agency so that section 3A reduces its accounts outstanding. And then in section 2, you are reporting that as a write-off, which reduces your section 2 ending balance by the same amount. We also ask, this is kind of something that we've recently talked about as part of our efforts to reduce the unassigned non-exempt accounts. If your agency is one that is not writing off the debts because of system limitations, for example, a licensing entity that would lose the ability to ensure that that debt is paid if somebody tries to reinstate a license, please use the comment section of the LFO to describe the amount of those RWO accounts at DOR and the reason that you are not recording the write-off. That just kind of helps us understand why there's an RWO balance at DOR that your agency is not writing off. It just kind of helps us understand that. Another reminder, criminal restitution accounts that are owed to a state agency should not be included in the LFO report as an AR balance to your agency. Those are actually reported by the judicial department. And so if your agency also included those, it would be essentially double counting those at the enterprise level. Now, where it is different is if you have a civil judgment with restitution, those are included in the agency LFO report because the judicial only includes the criminal restitution. So just a reminder on that. Any questions on any of the deadlines, the reports that need to be submitted? All of those should go to the swarm at das.oregon.gov when the time comes and you're ready to submit those. Hearing none. Legislative session. Now that we are past the sine die, get down here. So I've updated our tracker, and the items that you see in yellow here have all been passed and signed by the governor. Some of these we've certainly talked about before. House Bill 2029 increases the font size for items recorded with the county clerk from 8-point to 10-point as a minimum font. And that is effective for any recordings January 1 of 2024. But certainly something that you should start preparing now if you need to make any systems changes to make sure that your documents are in 10-point font. Senate Bill 309 modifies the notice of a decedent's estate. It now only requires one publication. Previously, it had to be in, I think, at least 2 different notifications in multiple newspapers, etc. So this updates that, and it is for effective January 1, 2024 for any probates that are commenced after that date. House Bill 2411 dissolved the Oregon Alfalfa Seed Commission, and that was effective at the point that the governor signed. And so there is no more Alfalfa Seed Commission. Senate Bill 184 goes into effect January 1, 2024. And it modifies the employer child support reporting requirements. So currently, if you hire someone as an employee, you have to provide that employee new hire information to the Department of Justice. That report will now need to include anyone who is considered an independent contractor. So this could be something that your agency procurement departments would need to coordinate with your HR department, since the HR is probably the ones currently doing the child support reporting for the new hires. Senate Bill 912 goes into effect 91 days after signee die, and it is related to the employment department, and it can exempt certain accounts, allows the employment department to deduct from future weekly family and medical leave insurance benefits for overpayments that were due to the individual's fault. So that's a employment department specific bill. Senate Bill 981 goes into effect January 1, 2024, and this corrects some oversight, if you, and some changes to definitions of state agency, and the ability for DAS to exempt certain accounts that originate in the Department of Revenue. During previous sessions, some of those changes to ORS 293 inadvertently removed that authority. So DOR can now request specific classifications of accounts to be exempt from the 1 year assignment that they have to turn it over to a private collection agency. Senate Bill 1047. This raises the contract price threshold for when a contracting agency may apply certain solicitation and procurement methods. I put this in here as a tracking item because we recently made updates to the OAM on vendor coordination, and specifically where when an agency is using its spots card, if the payment is 10,000 or more, they need to look at SFMA to see if there's a vendor profile for that vendor and whether or not that vendor is deactivated because of the reason to contact DOR. That was established because the procurement statute, 10,000 was sort of that threshold of where those procurement rules went into effect. So at this point, we do not intend to change the OAM for the spots cards, but it could be something that in the future we may sync those back up again. So that was the reason we were tracking this particular bill. And then Senate Bill 337, this really doesn't affect anyone here other than the Public Defense Services Commission is renamed, and it is going to be moving from the judicial branch to the executive branch in January 2025. So obviously for my purposes and what things that commission would be subject to in terms of reporting and OAM and things like that, that will change at that time. Senate Bill 228 is related to CCB and specifies certain circumstances where they may revoke, suspend, or refuse a license. And so that could be, that they've got an outstanding civil penalty that they need to pay, for example. That becomes operative on January 1, 2024 as well. And then Senate Bill 424 applies with the beginning of the 2024 academic school year, but it prohibits secondary institutions, universities, community colleges, et cetera, from refusing a transcript simply because the student owes a debt to the institution. So that is, in effect, those were all of the bills that we were tracking that actually passed both chambers and were signed by the governor. There were a number of bills that were outstanding as of sine die. Probably the most impactful would have been House Bill 2008, which would have modified the garnishment exemptions. I know that there was a number of amendments that had been worked on, but it died as of sine die. And so my feeling is that this will probably come up either, possibly in the next short session, but, certainly we would expect to see this coming in 2 years during the next full session. I don't see this as being something that will go away. So we probably need to be prepared with what the impacts are, so that, when those bills come through, agencies that issue garnishments can define the fiscal impact of those changes. So other than that, everything else died in as of sine die. So any questions on the legislative session and bills that we've discussed here? Yeah, Julie.
Hi, Gerald. I think I had reached out to you during the session about SB 184. I wondered if DAS was going to take the lead on defining independent contractor and finding a way to use either Oregon buys or SFMA or both to help facilitate that.
I will follow up again because I know when you talked with me before during the session, I kind of passed your concerns along to Malia, the new legislative coordinator. But now that this is going to be in effect, I will share the concern that somewhere, DAS needs to at least provide some guidance, I'll put it that way, on how this needs to be implemented. And I have not heard anything as it relates to Oregon buys. So maybe Malia can kind of find out how that's going to be rolled out through Oregon buys and how that will get communicated to agencies for procurement purposes.
Well, I think it's especially going to be interesting because since a few years ago, we all went through the vendor offset process. If they're looking at the opportunity to identify some of our independent contractors that are being paid either through a subsystem or through SFMA for the purpose of garnishing for child support, it would pretty much have to be treated the same way, would it not?
Yes. And that's what this is changes, is trying to close that loophole so that what would be considered these independent contractors. And as my understanding is, you had this increase during the pandemic of things like Lyft and Uber and lots of other circumstances that people were classified as independent contractors, and they were losing that ability to see that there was earnings being paid. And so this does close that loops in that regard.
Well, I don't know about other financial shops from other state agencies. I'd be anxious to hear from them if they had taken a look at this or not. So I don't know if there are other state agencies that routinely use independent contractors that would be strongly affected by this, but I'm hoping that DAS comes up with some sort of a identification methodology, and then some sort of way. I wasn't sure if we would potentially be using the same vendor offset process that you had facilitated, or if there would be some other way that this would occur. Obviously, we would hear from judicial instead of hearing from DOR, but just if other shops were prepared, do we know when the effective date of the bill is?
January 2024 for any, it's defined as any engagements or re-engagements with that independent contractor. So if you are entering into a contract after January 2024, it applies.
Which is only about 5 months away. So anyway, whatever you can find out about that would be very welcome. I'd love to hear from other state agencies if they're feeling like their vendors could be impacted by this, and if they've already started thinking about it.
At this point, I can tell you, I don't think that it will operate in any way like vendor coordination does, because that is a system, a file is uploaded into SFMA of those tax debts, if you will, that deactivates that vendor profile. I mean, I suppose it's possible, but like you said, with 5 months to go, I know that you're talking about a lot of technical updates that would have to occur for DOJ to provide, and it really is, if you're telling them, here's this new independent contractor that I'm doing business with, they're going to issue a garnishment. Versus the vendor coordination is, hey, we're doing a match to see, do you owe money? And if so, then DOR sends the garnishment after the match has occurred. In this particular case, I think it would be more muddying the waters if they were to try and do some type of a file load. Just because they're going to be sending the garnishment at the same time they're getting notification of a person who's going to be considered an independent contractor.
Well, I think it's just, if agencies are using SFMA, I'm not exactly sure how we would have it flagged for garnishment for child support. So anyway, I don't want to get us too far off topic, but if you find anything out, like I said, I'm wondering if other state agencies who are here participating have thought about this bill or how they'd implement it. If they have independent contractors, or if you can find out if DAS is expecting to do some sort of system-wide guidance, that would be really helpful.
Yep. Any other questions on any of the legislative items that were tracked? Okay. Just wanted to share that as we have been working on the ARPMs and looking at designation of peer groups, and I've shared in a prior ARC meeting some of our initial attempts at that classification. We realized that, one, there's a couple of additional areas that we could look at the information and designation of peer groups and outliers and the sort. I basically felt uncomfortable being the only one sort of making a designation of what those were for your agency. And so we decided that it would be better if we sent out an email and asked you based on a listing that, think of it as like a drop-down list that helps to identify, for example, we're looking at what is the agency functions or primary purpose of an agency, primary receivable types. Is it an invoice? Is it a civil penalty? Is it an assessment? Those types of things. Who are your primary customers? Are they individuals? Are they businesses? Are they local governments, federal government, state agencies? And then primary collection tools. Do you have the ability to garnish? Are you establishing liens? Those types of things. So we'll be sending out the email with these listings of the items that we've identified under each of those categories. Certainly if we've missed something, tell us, it's none of the above, it's X. But we're trying to still have a somewhat standardized choices for each of the categories, but allow the agencies to tell us what the right answer is for your agency. We recognize that there's going to be some agencies that have multiple programs, and you could have multiple responses. Basically, choose the most applicable option for your agency. This will help us in our data analysis, and as we start looking at those peer groups based on those types of categories, and why one agency may have different, you may have the same receivable type, but your collection tools may be different based on, your agency and your authorizing statutes. So it'll help us to sort of dive a little deeper by having these multiple categories. So we appreciate your help on that. So look for an email coming out soon. We'll provide those options for your, selection. So that'll help us in looking at, again, going forward, how those peer groups are looked at, what agencies are doing really well, and how we can and find out what are they doing that helps them become successful, and then take that information to those that are on the opposite end of the spectrum that maybe aren't collecting as much, but they have the same attributes, and help them to identify ways that they can make improvements based on things that are successful for other agencies that are similar to them. So any questions on the ARPM peer groups? Okay. Well, that's all that I have. Quick meeting today. Does anyone have anything for roundtable? Something that you'd like to bring up, ask a question, share with the group in any way? None? Okay, well, our next meeting will be on September 19th at 2 o'clock. Don't forget the LFO training on August 17th. And so year-end reporting will be here. Thank you all for joining us today, and we'll see you in September.
Thank you, Gerald.
Thank you, Gerald.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.